Many people often brag about investing in the stock market, but the reality is that most of them do not make any profit and may even lose money in the long run. The reason for this is that they spend the whole time looking for trends and trying to time the market, whereas the secret to achieve good passive income is by investing in the right stock for the long run and earning dividends. Hi, Matrix Money Maker here, and today's video is about the top 6 dividend stocks for the best passive income. Make sure to subscribe and watch until the end to see which stock best suits your interest, and maybe you could even invest in many of them. To begin with, when choosing a dividend yield, it is not necessary to opt for the highest yield you can find on the market. The goal is to see the possibilities that the company has to grow or to last on the market for a long time. This strategy will allow you to gain more money in the long term with dividends. Now, if you do not know what a dividend is and how it works, I highly recommend that you go check out our video on how to invest in dividends to better understand the functioning of dividends. The first company is the Procter and Gamble Company. The P&G Company is an American multinational consumer goods corporation. The P&G Company specializes in household products, consumer goods, and personal care items with notable brands including Crest, Tide, Pampers, Dawn, and Secret. These are essential products for humans, and the world cannot live without them. That is why the company has an impressive dividend history stretching back over 6 decades. The company has also manufactured numerous pharmaceutical products, including osteoporosis drug Alcatel and also Prilosec OTC. From the background of the company, it is easily understandable that they will not go anywhere, and they certainly will remain on the market for a long time. They have their hands everywhere, whether it is in retail stores or in grocery stores. The company is expected to grow even more as their stock price is forecast to increase during the following year. P&G has a dividend yield of 2.42%, which is good for a company of that influence. And this is $3.6 in annual return for every share of P&G that you own as a shareholder in passive income. The second dividend stock for passive income is Johnson & Johnson. Johnson & Johnson is an American pharmaceutical industry company which develops medical devices and consumer packaged goods. The company owns brands like Tylenol, Zarbee's, Neutrogena, Aveeno, and Listerine. In spite of owning those brands, G&G is home to well-known products including Tylenol pain medications, Band-Aid bandages, Neutrogena skins, many other body products, and Avacue contact lenses. Johnson & Johnson have a 2.57% dividend yield, allowing us to class them in our list of companies for passive income. This will get you a $1.13 per quarter for every stock of G&G that you own, making you approximately $5 per year in passive income. In addition to that, they have consistently increased their dividend in the following 60 years as well as their income. Furthermore, this company is going nowhere for a long time and has a big potential long-term growth because they are one of the biggest companies in the healthcare industry, which is a sector that is here to stay as people will always need medication and care even in crisis moments. Not to add that the pharmaceutical sector is forecast to increase 12% by 2025, reaching more than $60 billion. Another company that will pay you a good dividend is JP Morgan Chase & Co. Chase is an American investment bank and financial service company. Chase has grown to serve more than 66 million households, including over 5 million small businesses. And the best thing about JP Morgan is that they have a lot of cash in their balance sheets because it is an investment bank company. They have more than $1 trillion in liquid assets, which 107 billion of it is cash. So if you own a share in this company, you will feel secure about knowing that it is one of those banks that cannot go bankrupt because they are well positioned in the financial sector. For this reason, the company is not expected to go anywhere soon. Chase is paying a 3.5% of dividend yield on their stock, which means that every share of Chase that you own would get you $4 per year. It is safe to say that even though there is a problem in the economy, or even if there is a crisis, the banks would always profit, so it is safer for the shareholders. The next stock that will bring you passive income is Iron Mountain Incorporated. Iron Mountain is an American enterprise information management services company. The company owns data centers and secure warehouses facilities in order to store different physical and digital assets, such as digital data, documents, collectibles, or even art. Iron specializes in real estate investment trust. Its information destructions, records management, and data backup and recovery services are supplied in 58 countries and to more than 220,000 customers throughout Latin America, Africa, North America, Europe, Asia, and also Australia. Iron Mountain offers a 4.55 dividend yield, which represents about 62 cents per quarter for every share you own in the company. Not only that, but during the last month, their stock went 5% up, whereas the market is crashing and the S&P 500 is down around 17%. This may be due to the increase of their total revenue as the demand for their services is still increasing. Not to add that during the past 11 years, Iron Mountain Incorporated has always consistently paid their shareholders dividend, which makes it a trustworthy company that will always pay you a great dividend passive income. Now, let us talk about the company with one of the highest dividend yields in this list, Arbor Realty Trust. Arbor Realty Trust is a real estate investment trust company based in New York. This is a good company because it redistributes at least 90% of taxable income to shareholders. Arbor Realty Trust invests in a diversified portfolio of structured finance assets in the single-family, multi-family rental, and also in commercial real estate markets in the United States. The company operates in two segments, which are structured business and agency business. Moreover, Arbor Realty Trust has paid out quarterly dividends ranging from 8 cents to 72 cents per share for 18 years to its shareholder. And over the past 5 years, Arbor Realty Trust's dividend yield has averaged 9.7% per year. The real estate industry is a safe industry because as the population is growing, people will need more houses, and so the demand will keep on rising. That's why the company has 11.42% dividend yield, which is pretty high, but remains safe. BHP Group is the next and last stock on the list. BHP is a metal and mining firm headquartered in Australia. Last year, BHP signed a contract with the giant of automotive company Tesla, involving transfer of nickel from BHP's mining operations. The company's dividend yield is 10.16%, which represents around $1.6 per quarter. That is approximately $6 per year in passive income for every stock. Just like BHP says on their website, their purpose is to create long-term shareholder value through the discovery, acquisition, development, and marketing of natural resources. The strategy is to own and operate large, long-life, low-cost, expandable upstream assets diversified by commodity, geography, and market. For this reason, the company will potentially last for a long time, and As their stock price has increased over 9% last month, it may still increase in the future. Subscribe and turn on the notification so you don't miss more video about how to make money, personal finance, investing, and much more. Check out the latest video about the best businesses to start during recession. Take care.